Hi, good evening, everyone. Welcome to FSMOne Education Webinar Series, where we help investors invest globally and profitably. First of all, thank you so much for taking the time and attending the webinar tonight. I'm Elise from Client Investment Specialist team. Today, we are discussing looking to save tax and secure your retirement. Discuss private retirement scheme, PRS. I will keep things simple and focus on explaining what PRS is and how it works without diving into technical analysis or market update. Our aim is to make it easy for all investors to understand. Before we proceed, we take a look at the disclaimer. The content of this webinar is primarily intended to introduce new or existing investors to the concept of PRS, its functioning and its benefit to us. However, this webinar does not offer any advice or specific information on the subject matter. Therefore, before you make any investment decision, we would strongly recommend that you seek professional guidance from our client investment specialist team. In today's section, I will cover what is a private retirement scheme, PRS is, what is the difference between PRS and EPF, explore its benefit, discuss available investment fund and how to get started, and explain the PRS fund withdrawal condition before and after turning 55 years old. Do you know that most Malaysians do not have enough saving after retirement due to running out of EPF saving? For most people, their goal is to able to retire comfortably. However, the effect of COVID-19 pandemic have achieving this goal more challenging. Because of this, some are then forced to return work by doing business to cover their monthly expenses. According to the newspaper The Star, our Prime Minister, Mr. Anwar, claimed that majority of EPF contributors do not have enough funds for retirement. Whereas for Straits Times, 71% of EPF contributors aged 55 and below do not have enough to rise above poverty level. So to avoid this thing happening to us, we need to secure our future by starting early to save for retirement and grow our wealth. This time, we would like to explore the wealth building option known as PRS. First, I will share what is a private retirement scheme, PRS. What is PRS? PRS is an investment scheme that facilitates the accumulation of retirement savings through the voluntary contribution. PRS seeks to enhance choice available for all Malaysians to supplement their retirement savings under a well structured and a regulated environment. Each of us, including you and me, has the opportunity to contribute to a private retirement scheme regardless our employment status, be it private employee, government employee, or self-employed, as long as we are 18 years old and above. When we make PRS contribution, we have the freedom to select the retirement fund that align with our individual preference. Each PRS present a unique investment option. We can make decisions based on our own retirement need, goal, and risk tolerance. It is designed to complete the Employee Provident Fund, EPF, and is regulated by the Security Commission Malaysia, SC. Next, I will share what is the difference between PRS and EPF. What is the difference between PRS and EPF? Both PRS and EPF share a common goal of securing retirement savings for all contributors, but PRS is not meant to replace EPF. Instead, it is a supplementary scheme to help us boost our savings. The main difference between PRS and EPF lie in their nature, purpose, and management. The first one is a nature and purpose. PRS is a voluntary long-term saving and investment scheme designed to help individuals save for their retirement. It is managed by a plural PRS provider and offer various investment options, allow individuals to choose their preferred risk and return profile. For EPF, EPF is a mandatory savings scheme for employees in Malaysia, with the purpose of offering financial security and assistance for retirement, housing, medical expenses, and various other needs. The next one is a contribution. Contribution to a PRS are made by the individual participant voluntarily, and there is no mandatory contribution from the employer. Participants can choose to contribute to their PRS account based on their financial capacity. For EPF, EPF contribution to EPF are mandatory for both employee and employer. A portion of the employee salary is deducted and contributed to the EPF by the employer. The EPF contribution rate varies based on our employee age and salary range. The next one is an investment option. PRS offer various investment funds with different risk profile, including conservative, moderate, and aggressive options. Participants can choose the fund that align with their risk tolerance and investment goal. For EPF, EPF primarily invests in fixed income instruments and conservative assets to ensure the safety of the fund and provide stable return for its member. The investment strategy of EPF is generally more conservative compared to PRS. Another next one is a withdrawal. Participants in PRS can make withdrawal from their PRS account, but subject to certain conditions and guidelines set by the PPA. Withdrawal may be allowed for general purpose, permanent departure, housing, and healthcare purpose. For EPF, EPF provides the facility for partial or full withdrawal at various stages as well, including the retirement, housing, education, and medical needs. The availability of withdrawal and the withdrawal rule are governed by the EPF regulation. The last one is the regulation and oversight. PRS is regulated by the Security Commission Malaysia, we call it SC, and overseen by the Private Pension Administrator Malaysia, we call it PPA as well. For the EPF, it's governed by the Employee Provident Fund Act 1991 and is managed by the Employee Provident Fund Board. For easy to compare, here is a table summarizing the difference between the PRS and EPF. For the eligibility, for PRS and EPF is same, open to Malaysia citizen and non-Malaysia citizen. The contribution of a PRS is voluntary, but for the EPF is mandatory for employee. The return of PRS is non-guaranteed, but for EPF have a minimum dividend guarantee of 2.5% per annum. The account structure for both investment schemes have a bit similar, have two accounts, one called account A or account B or account 1 or 2. The first account will consist of 70% of a contribution. The balance of 30% will in another account at either account B or account 2. For PRS, if let's say you invest with PRS, you can enjoy the tax relief up to 3,000. For EPF, if let's say mandatory contribution can enjoy up to 4,000, whereas voluntary contribution can up to 3,000. The withdrawal age for both are same if 55 years old and above. Pre-retirement withdrawal for PRS is yes, but maximum once a year from the account B unless you're permanent leaving the country, like you giving out your Malaysian citizenship or house, and then it may subject to 8% tax penalty. For EPF, you can withdraw from account too for the approval expenses. For PRS, yes, they have a Sharia compliant, but depend whether the unit trust you invest is a Sharia fund or not. For EPF, also yes, but depend whether the member did opt for simpanan Sharia or not. In conclusion, both PRS and EPF are share the same theme, but for PRS is a voluntary voluntary, but for the EPF is a mandatory for all the investor. Next, I will share about the advantage of investing in PRS. Investing in PRS comes with few benefits. The first being tax incentive. When you make PRS contribution, you are allowed to claim the tax relief up to 3,000. The second benefit of investing in PRS will be designed for the retirement. It is like the second EPF. Contributing to the PRS can help us get better prepared for retirement. The next one is affordable and flexible investment. The minimum initial investment starts at only 100 ringgit, but it depends on the PRS provider you choose to invest, which is an easy way to diversify your money through the unit trust fund. Compared to EPF, PRS is more flexible because we do not have to contribute a fixed amount every month. We are free to choose the time for us to invest and also the amount of money we want to save. The following advantage is that by investing through our FSMOne platform, you can enjoy a 0% sale charge for PRS investment. For your investment and for your information, there is an 8 ringgit for the PPA annual fee. It occurs and it corrected by the PPA, and the charges will apply to the subsequent PRS investment. It means once per annum and per PRS provider basis, no matter if you top up directly with the PPA or other distributor. Investors who want to avoid paying this multiple 8 ringgit PPA annual fee, you may consider invest in one fund house per year. The next one will be an easy investment. You can start investing through FSMOne without submitting the application form. You have the freedom to choose the PRS provider and your desperate fund, whether you are self-selected or default auction fund. Later, I will explain more about this. The Private Pension Administrator Malaysia, PPA, is the central administrator for the PRS. PPA provides one-stop account management and ongoing member services to serve and protect our interests. PRS is regulated by the Security Commission Malaysia, SC, and the schemes are safeguarded by the scheme trustee. Last but not least, an additional benefit for PRS is the nomination feature. This nomination help the nominee to get the money faster compared to will. In Malaysia, only PRS has a special way of making sure your loved one get what you have saved for them without any problem if something happened to you. With PRS, a voluntary long-term saving and investment scheme designed to help you save more for retirement. You can contribute at your own pace and within your own financial ability. The next one is things we should know before we start a PRS account. When making a PRS contribution, we need to take into account various factors such as our age, personal and household income, risk tolerance, retirement objective as well as suitability of the different fund under the various schemes to meet our retirement need. The following chart offers suggestions on what you should take into consideration prior to investing PRS. The rule of thumb is that investment strategy should be based on the time you have until retirement. For example, long-term investment strategy should focus more on capital growth, while short-term investment strategy should focus on income generation. But remember that everyone's situations are different because their investment goal and risk tolerance also different from each other. Based on investment objective, you can choose to invest with the intention of growing your capital, generating income, or a combination of both. If your investment objective is growth, then primary focus is to generate compounding and accelerating capital growth by investing in equity. If your investment objective is a combination of both, meaning growth and income, you can achieve a balanced requirement for compounding capital growth as well as income by investing in mixed assets such as equity and bond or fixed income instrument. Last but not least, if your primary focus is to generate a regular income stream, consider investing in bond or fixed income instrument. Your life stage, those who are nearing retirement age should focus on investment that can provide them with a sustainable income, while younger people should be looking toward investment that have a higher potential for growth. For your risk appetite, investors who can handle greater risk tend to be those with a long-term view, as they are more able to weather any market volatility. Those who are value stability tend to be those already nearing retirement age and therefore would benefit from more for investment that would allow them to preserve their initial capital. As I mentioned just now, one of the benefits of investing in PRS is availability of tax relief. The PRS tax relief was specially introduced to encourage you to save more for your retirement. Whether you are newly enrolled or looking to top out your account, you will love the PRS tax relief of up to $3,000 annually. This tax incentive is available until assessment year 2025. For example, if tax bracket is a 19%, your 3,000 PRS contribution will give your tax saving of 570 ringgit. You may take a look. This table gives you a clear picture of the potential tax saving you could reserve from your yearly 3,000 PRS contribution. According to the research, around 40% of Malaysia is under M40. Then you can fall under this tax bracket of the income tax. So when you invest the PRS, right, you can see for the 90% one can save around 570. Whereas if let's say you fall under the 25%, you can save around 7,500. PRS is a long-term saving and investment scheme designed for your retirement. Make time and compound growth work for you. Compounding is a powerful tool for retirement saving. It adds interest or earning to your contribution over time until retirement. You should let your PRS contribution grow over time and benefit from the magic of compounding on your invested amount. For a simple illustration on how compound interest work on your PRS contribution, you all may refer to the chart on this screen. The reason that investing is so powerful is compound interest. It is basically the process of interest building on top of interest. The early you start investing, the greater the accumulated return on your original investment. it is not only about how much money you put in, but also how much time you have let your money work for you. This effect builds on itself over time like a snowball. Moving on, I will share what fund can you invest in and how to get started. In FSMOne, they have a 61 PRS approval unit trust fund with 7 different PRS providers. The 7 PRS providers are Aham Asset Management Berhad, AIA Pension and Asset Management Sendang Berhad, and Fund Management Berhad, Kenanga Investor Berhad, Manulife Investment Management and Berhad, Principal Asset Management Berhad, and the last one is the RHB Asset Management Sendang Berhad. According to the guidelines set by SC, each provider will have at least 3 core funds, which are growth, moderate, and conservative fund. Some provider will not have core fund. Some provider will have a non-core fund as well. Later, I will explain more about this core and non-core fund. You may access complete list for fund through our FSMOne fund selector. To access the fund selector, you may click on the fund. Then you proceed to the tool here. Proceed to the tool here, and then you click on the fund selector. Once you have access to the fund selector, you will see an option labeled as More Filter. Click on this to customize your preference or just filter the PRS listing. Once you have set your preference, if everything looks good, proceed to clicking the filter button here. Upon clicking the button filter, a comprehensive list of a PRS will display. The list will including the detail of a fund performance, fund information, and transaction info as well. Besides, for those existing or new investors who have no idea how to choose the PRS or what fund can be invested, then you may proceed to our FSMOne platform by clicking the fund. After that, click on the recommended fund. All funds that fall under the recommended fund list were recommended by our internal research team. They recommended all these funds based on our fund methodology. After you click on the recommended fund, you may select the private retirement fund from the list. If you are not sure which fund are good to invest in, you may see our client investment specialist to recommend a portfolio that is suitable to your risk appetite. The client investment specialist will provide a suggestion according to your risk profile and age accordingly. In this slide, I have filtered the top 5 more consistently performing PRS for you all to compare. Investing in PRS is like planting a tree. It takes a while to grow and give fruit. So when you check this PRS, you may realize a few PRS past 5 performance are more consistent when compared with the peer and growing steadily in the past. But remember, historical performance is not indicative of future performance. So take your time to understand this PRS and decide if they fit your long-term money plan. It is like making a smart choice for your future by looking at how these PRS have done over the past year. In the following slide, I will share how to get started. As I mentioned in the previous slide, PRS has core fund and non-core fund. Non-core fund PRS refer to investment fund. Within a PRS, they are not considered essential or primarily fund for retirement planning. Non-core funds are typically offered as additional option beyond the core fund and may have different risk profile, investment strategy, or asset allocation. Investors can invest in any of the non-core fund, but the risk and return profile of this fund may not match your age group. You must know important information such as knowing the risk and expected return of fund before you start investing. Compared to EPF, PRS is more flexible because we are free to choose the type of fund to invest in. Investors have the option to invest in with each provider, allowing them to select the default core fund aligned with their age. Based on this table, you can see that if let's say the investor who fall under this age category, 18 until 44 years old, we will suggest investor invest in the growth fund because it's more focuses on the growing the portfolio. The risk will be slightly higher and up to 70% invested in equity fund. For investors who fall under this age category, 45 to 54 years old, we will suggest to moderate fund. Focus on growing the portfolio while seeking consistent income. The risk is a moderate and up to 60% invested in equity. For investors who already reached the retirement age or more than above, can consider conservative fund, more focused on generating income and getting the portfolio ready for use in retirement. The risk is a minimum and only 20% invested in equity. Next, I will share how to contribute to PRS through the FSMOne. Investors can register, top out, and check their fund through the FSMOne. They have two types of transaction method via our FSMOne platform, which is online and offline. When you use the online transaction method, things get really simple and convenient. Without submitting the paper document at all, when you're investing through our FSMOne mobile web and FSMOne mobile app. But the online transaction method only apply to the few PRS provider, which are Aham Asset Management Berhad, Kenanga Investor Berhad, Principal Asset Management Berhad, and RHB Asset Management Berhad. Other than 4 PRS provider I mentioned just now, AIA Pension Asset Management Sendian Berhad, and Fund Management Berhad, and Manulife Investment Management and Berhad must submit the paper document if you are first time invest PRS through our FSMOne. Regardless, invest through FSMOne mobile web and mobile app. Besides, all contributors must submit the paper document if their first time investment PRS through our FSMOne website. In conclusion, investors who first time invest PRS through our FSM website, regardless of which PRS provider, also need to submit the physical document. If they choose to invest any PRS provider like Aham, Kenanga, Principal, and RHB through the FSMOne mobile web or FSMOne mobile app, they did not need to send in any physical document. On the other hand, if they considering investing with AIA and fund or Manulife PRS provider for the first time, using the FSMOne mobile web or mobile app, they will need to go through the traditional way of submitting the physical document. This step is required before you can start investing with this provider through the online platform. In the final section here, I will explain the process of how to withdraw the PRS money. For the PRS account structure, they have two accounts which are account A and account B. For the account A, they can be withdrawn upon reaching retirement age, or they have a certain condition that can be withdrawn. For example, the PRS contributor passed away, permanent departure from Malaysia, or in the event of permanent total disablement, serious disease, mental disability. For account B, contributor can be withdrawn 1 year after the date of enrollment. I will explain more detail in the next slide. For PRS contributor who are under 55 years old and would like to get their money from their PRS account, there are some guidelines from PPA they should know before they can take out the money. Pre-retirement withdrawal can only be made for their following reasons, which are general purpose, permanent departure, housing purpose, and healthcare purpose. Regarding the PRS pre-retirement withdrawal, it is important to note that only the account B is eligible for withdrawal after a 1 year period from the date of investment, with the exception of the individual planning to permanent depart from Malaysia. Pre-retirement withdrawal for general purpose can be made in partial or in full from the account B, which hold 30% of the member PRS saving. But the withdrawal are allowed 1 year after the date of enrollment, once per calendar year, and subject to the 8% tax penalty on the withdrawal amount. Pre-retire withdrawal due to the permanent departure refer to the member who is in Malaysia and would like to surrender a Malaysia work permit or citizenship. So in this group of investors, the withdrawal must be made in full from the both account A and account B, and will not have a 8% tax will be applied. If you need the further information regarding the procedure of PRS withdrawal because of a citizen surrender for housing purpose and healthcare purpose, feel free to visit the PPA website. Their website is www.ppa.my for the detail for more detail. Lastly, is the retirement withdrawal option available when PRS contributor reach the age of 55 and above. Upon PRS member reach the retirement age of 55 years old, they are allowed to withdraw in partial or in full from account A and account B. There is no limit to the frequency of retirement withdrawal and no 8% tax penalty. Furthermore, even if PRS members have reached the age of retirement, they still can enjoy the benefit from the tax relief of up to 3,000 per year, as long as keep contributing to the PRS and they are still required to pay the income tax. To withdraw the money from the PRS account, PRS member required to fill out the withdrawal form provided by the fund house, including a copy of their identification card and a personal account bank statement not later than 3 months. After completion of the form, PRS member must send all these physical documents to FSMOne or any other fund house provider or distributor. Once they receive the physical document, they will verify everything. The PPA will handle the withdrawal process and they will get their money as requested. Before we proceed to the Q&A section, let's summarize the key takeaway today. PRS is a voluntary long-term saving that can contribute at your own pace and within your own financial ability. PRS is not designed to take the place of EPF. It is served as an additional saving to help us get better prepared for retirement. Flexibility investment scheme and free to choose what type of fund you would like to invest in. Save extra money on your tax by getting out to 3,000 in tax relief each year. Currently, FSMOne running a PRS campaign which start on the 1st of October 2023 till 15th of December 2023. Receive 40 ringgit worth of FSMOne multi-currency cash account will credit cash account credit when you invest a minimum investment gross amount is 3,000 in one PRS fund in a single transaction to our FSMOne. Participating in the PRS provider for this campaign, which have the Aham Asset Management Berhad, Kenanga Investor Berhad, Manulife Management and Berhad, Principal Asset Management Berhad, and RHB Asset Management Berhad. For more detail, kindly proceed to our FSMOne website. They have a few questions in the Q&A section. I will take accordingly. If you have any question, you can post over there as well. The first question is how to calculate the charges and need to pay for PRS. This question, if let's say you invest in our FSMOne, right, the still charge is 0%. And then if let's say for new investor, if let's say first time enroll to the PRS account, in previously, suppose if let's say you enroll to PRS account, they have a 10 ringgit of account opening fee. But at the moment, the PPA was waived this account opening fee until further notice. So at the moment, if let's say you new enroll to the PRS, then it's no charges for you to invest. But if let's say this year, example, you invest in the principal fund house, then next year you consider to top out the principal again, then will be charges 8 ringgit PPA annual fee. If let's say this year you invest in the principal, next year you may consider RHB or Kenanga, then you will not get charges the 8 ringgit PPA fee. The second question is, it is true that EPF does not pay any dividend. It is true that EPF does not pay any dividend if the contributor is above a certain age. If so, what is the age? Actually, EPF, as long as investor did not withdraw from EPF, they still can enjoy, can get the dividend every year. Even the account amount also still can entitle the interest. So they don't have any like certain age or age limit that mean that investor cannot get the dividend even you are already retired, but the fund you didn't withdraw from the EPF, you still entitled the EPF interest. Another question is how to avoid the annual charges 8 ringgit. Can you advise? Okay, for this one, as I mentioned just now, if let's say your first year invest in principal, second year you can consider invest in another PRS provider. So in our platform, total have a 7 PRS provider. So every year you can consider invest in different PRS provider, so you can avoid this 8 ringgit charges every year. Let's say I bought unit trust that high risk. After age of 45, can I change all my fund that I bought before moderate or conservative time? Okay, if let's say investor who invest in the PRS maybe during 30 plus. So during they reach the certain age or their risk profile are reaching to the more conservative. Actually, after 1 year they invest, investor can choose whether they want to switch to the do the switching, or transfer, do the switching from growth, mean for more moderate risk to conservative risk also can. You all can just click the switching from our website. If let's say you don't want stick with the principal, maybe you consider invest in the second PRS provider. After 1 year, you also can fill out the form and request to change the PRS provider in our website as well. If let's say you want more detail, right, you can send email to us, then we will send you the form, everything, so can guide you through the email, the procedure, everything. If anything happened to me, do my family can claim for my holding? How will be the process? For this question, can I know the holding you mean is in our FSMOne or your PRS? If for a PRS, right, for investor can submit the nomination form to us, then we will submit to the PPA. So touch wood, anything happen to the investor, the nominee can bring along all the document like that certificate, and then the FSMOne statement or PPA statement approach us, then we will submit to the relevant department. After that, the money will transfer to the nominee. Another question is how will take from the withdrawal process? Can I know, is it how long to take for the withdrawal process? If let's say you would like to perform the withdrawal, you can pay the you need to submit the physical form to us. After that, everything complete, everything is all the details complete. We normally is around 2 weeks. We need to submit the form to the fund house, and then fund house need to send to the PPA, then we'll process. The process is the timeline is roughly around 2 weeks working business day to complete to get the money. Where can one see the nominee? Did we need a nominee in PPA website? Yes, when you submit the PPA nomination form, right, to our site, and then once the nominee already add on into your PPA account, you will receive the SMS as well. Other than that, you can log into your PPA account to check who is your nominee. What above the balance of the fund that contribute already has in EPF? Does this get dividend if the contributor is older than the cut-off age? Can you explain this? What above the balance of fund the contributor already has in EPF? Does this get dividend if the contributor is older than the cut-off age? Sorry, I don't get this question. Can I explain more about this? Which PRS fund house has have mandate in investing in US or foreign currency based fund? For most of the PRS, right, actually investing in the Malaysia or Asia and Japan. So far, did not have any PRS invest in the US market yet, if I'm not mistaken. For this one, maybe you can send us the email, then we can check with our research team, see any PRS or new PRS is investing in the US market. As I know, most of the PRS actually invest in Malaysia or Asia, Japan or risk fund. Why FSMOne did not include the PRS fund from the public mutual? Will you be considering onboard public mutual in the near future so that investor can view all the investment under one same platform? For public mutual didn't listed in our platform, actually, because public mutual have their own agent as well. So this one, if let's say in future got any cooperation, we will announce in our website. So you may still stay tuned. follow our website. If any latest news, then you can receive it. Can you suggest a few PRS that work for a 30-year-old person who have a stable monthly income? Okay, Jason, for fund suggestion, right, we need investors to update their risk profile, everything. So if let's say you would like to get the recommendation, I will suggest you send in the email to Invest Help. So our client investment specialist, they will go through your profile and based on the risk profile, then give you the suggestion. Is it true normally EPF dividend is higher than PRS return? This one actually is a depend. Let's say cannot say it's normally EPF dividend is higher because unit trust is depend on the market condition. So if let's say for long term, maybe you can check back the previous record. Some of the EPF, some of the PRS return, right, actually annually have around 7%. As I mentioned just now in the slide. Let me show in my slide. Got PRS the sample. The return actually can say slightly higher than EPF lah, but not considered every year. But still got chances can higher than EPF. So actually PRS is just like second saving for all the investor. So you can more here, this one. Around 6 or 7%. So actually it's not every time also can say EPF return is higher than PRS. What is the return we can expect from the PRS investment? PRS investment basically is for our retirement saving. So for investor, if let's say you are still considered young, so you expected your investment is a long term, and then you need to see which PRS provider you invest in. Example, this year you maybe invest in the principal. If let's say the performance next year is not really good, I will suggest you go do the portfolio review, and then maybe you can consider switching another more outperform PRS. So average return, if let's say we also need to depend your risk profile. If let's say your risk profile is a balanced investor, so the return maybe for PRS can do 3 to 5% or more than that. It also depend on the fund manager, how they manage the fund. Is there any question other than all of this? Any fee incurred except ringgit. At the moment, right, PPA account opening fee 10 ringgit is a waiver. Switching fee or consider transfer the PRS provider 25 also waiver. The rest is like so far only the 8%. But for more detail, I will suggest you go through the go review the PPA website. The fee. So far at the fee, most commonly will occur is 8 ringgit and 10 ringgit and 25. So if let's say you are more detailed, I will suggest you go PPF website to go through. Any cost if switch the fund from one provider to another. As I mentioned just now, have a 25 ringgit, but at the moment it's waiver. But for more detail, I will suggest you go for the PPF website to check, because different PRS provider, they have a different charges. And then another thing, I will need to mention, only invest in the FSMOne is a 0%. If let's say today you top up in the PPF website, may have a still charge as well. So this one, you all need to check in the PPF website, because PPA is like a center of all the PRS provider. So investor, maybe some of investor, they're lazy to check in different platform. They maybe have a public mutual, have a public mutual PRS with public mutual, have PRS with us, and then have PRS with other distributor. And then for them, easy to monitor, right? Normally they will view in the PPA account. And then some investor may forget which platform they invest. Then they directly top up in the PPA website, right? May incur the sales charge, yeah. Only investor who invest in our platform, the PRS will be zero charges. This zero charges is not applied to all platform or distributor in Malaysia, only the FSMOne. For inter-fund switching, how many days to perform the transaction? It depends on the PRS provider, because different fund and different PRS provider, they have a different switching, they have different processing date. So I cannot give you the lovely date transaction because some may take longer. If let's say no more question, then will be the end of our webinar today. And then thank you everyone to attend our webinar today. If you have any question, right, you may drop us an email to investhelp.mind@fundsupermart.com. Otherwise, you can call to our hotline. We will assist you. By this, we will end our webinar today. Good night, everyone.